Nifty's cooled off completely, but one index which is doing well is the Nifty Realty Index. Now, owning an apartment is an aspiration shared by many, a thought that's perhaps prompted the GST Council to lower tax rates on affordable and under construction buildings. Builders will now be hoping that this move prompts buyers to come back into the market looking for houses. Million-dollar question is whether or not it's going to be enough to make a dent on the massive stockpile that builders are sitting on right now. Joining us right now to talk about this in greater detail is Sangeeta Prasad, the MD and CEO of one of the largest developers in the affordable housing space, Mahindra Lifespace. And here in our studios, Pankaj Kapoor, the Managing Director of research firm Liases, Foras. Both of you, thank you so much for joining in. Sangeeta, let's start off with you. One can't say that this was unexpected. Yes, there was a delay from Wednesday to Sunday, but most people anticipated this would happen. My question is, does this change the sentiment in the minds of the buyer enough to get the checkbooks and sign on the dotted line to buy the property?
Of course, it does change the mind of the buyer because it has been in the making for a while, because there's a distinct 7% cut in both segments of the market, and the buyer, it's also a message to the market as well as to the whole community that yes, the intent of the government is to boost buying and selling of homes, which has been muted in the past.
Interesting. Well, yeah, I'm glad you made that point, because the budget too showed some signs of the government taking cognizance of the state that the real estate sector by and large was in. So let's talk about which of the two segments do you reckon benefits more, because I think both affordable and non-affordable have seen these cuts. Typically, the affordable one is where the price sensitivity, to my mind, would be higher. But what are your thoughts?
So first of all, I wouldn't categorize the market as affordable and non-affordable.
Okay.
Anything which is affordable to the right segment is what we should look at. So first of all, the affordable has now just become 1%. So if you can understand, it is merely it is a nominal tax, and that is a great indication to the market that the government wants people at that segment to buy homes, and there is virtually no arbitrage between under construction and fully finished goods, because 1% is indeed a nominal charge. In fact, even in the homes for middle class buyers, it has reduced to 5%. It will reduce to 5%. That means again a 7% cut, which will inspire people who have been waiting to buy homes to buy homes. That's the whole idea and intent, and we'll see how it pans out as we step into the next few days and months.
All right, while obviously this is a big leg up for the consumer, Pankaj, come in on behalf of the developers and what this stands to bring in for them, because you've got the input tax credit now out of the window.
Yeah, if you look at the sales were slow, and because of that their cost was going up because the finance cost was increasing. People were not buying in the under constructions. Most of the demand was shifting to the ready, and making a project ready means you have to employ more capital. So and for that, it creates a vicious circle, where cycle kind of a thing, today's the price is not interacting, demand is not there, and if you have to make the project ready, that means your woes increases. So by bringing down the GST in the under construction, government actually has boosted the or created an avenue where the builder can reduce their cost many-fold. If you look at that, as per my data, which is 60 cities data, the affordable segment, where the GST has been reduced to 1%, constitute 53% of the sales as well as unsold stock, which is very, very big segment. Yeah. But although in terms of value of stock sold, if you look at it, contributes only 22% because it's affordable segment. But nevertheless, it's a big boost for the affordable housing, and in that particular segment, bringing down 1% GST itself is a very, very boost for the overall real estate sector. Input credit point of view, I have a point of view is government should have maintained the input credit for the normal housing, which they say that where the GST is 5%, not for the sense that it would have reduced the cost for the real estate, but the GST was one area which was actually curtailing the employment of black money, because the invoicing trail could have been maintained. By removing the input credit, that means you have left out. The builder don't really have to worry about submitting their input credit with the government, where the trail of the invoices will not be available. That means it has opened up the avenue for employment of black money again into the real estate sector. That's the overall thing which I'm saying, that, and real estate sector employs good amount of black money. So in that segment, I see that it is not. But in the overall sense, it has done very good thing to boost the sales in the under construction. It will help reviving this sector, which is facing the toughest time right now.
Sangeeta, coming on this, I mean, while, earlier on, I think there was an 8% input tax credit that came in, which is no longer present. Will that create a little bit of margin pressure for developers like yourself? And the second part of the question being, can that be completely offset by the pickup in demand and the offtake of the inventory that is there?
So that's a good question, but can be answered as we go along in the next few days and months, as I said earlier. So the input tax credit in the short run, Devina, will create a little bit of imbalance in the market, because, earlier when there was a credit, we were passing off some of the benefits to the customers. And without that, now there will be a pressure not only on margin, but on pricing also, because developers also need to make reasonable amount of money. So that's the pressure, but we will be doing our calculations and seeing whatever best benefit we can give to our customers, because the first intent is to raise demand in the market. And that's what, and on a lighter note, Pankaj, we always deal in white money, so that part will not impact us. But yes, there should be standardization in the system. Transparency is very important. But I also guess in the long run, such kind of initiatives by the government will standardize and stabilize the market, will bring in more transparency than opacity.
Okay, interesting. By the way, keep in mind, some of the players, I think there are a couple of notes which say that companies like DLF which sell apartments only after completing the construction would be unimpacted by the GST rate. And Pankaj, there is this whole theory, and I would want Sangeeta's view out there too, that some of the companies in geographies like Bangalore, wherein the incidence of ITC is higher, would tend to get impacted more than companies operating in other geographies like Mumbai. Yeah. Have you done some analysis thereof?
Yeah, I'm saying that, like, wherever the VAT used to be higher, there the benefit from the input credit tax was higher. So if you look at like Maharashtra, Haryana and all those places where the VAT was in 1%, the impact was not really much of the input credit tax, but the Karnataka, it was probably 4% or something. So the developer were really gaining quite a lot in comparison to the other state. That is there. But having said that, like, GST is one which is bringing all state together. So someone is slated to win or gain, or someone is slated to lose. That is there. But overall sense is, like, my own sense is that GST was one area where it was bringing the transparency in this particular system. I would have said that, like, for the normal housing, they should have allowed it.
Interesting. Sangeeta, one, within your geographies that you would be operating in, would you benefit in some projects versus others, depending on which geography the project is in? And part two of my question, how much of under construction property currently which benefits as a result of the move that has happened yesterday?
So both the questions, we are doing the analysis of how it is impacting each of our projects, and we will be coming out with our strategy thereof. As far as under construction projects go, I think the customers, we will see some in this financial year, some imbalance, but I think as we go along, the velocity will surely improve. And in the affordable, under construction is as good as finished products, because with a 1% GST margin.
How material in terms of demand pickup are you envisaging? Obviously, there's a transition period now. While the announcements have just been made, you have to make sure that the transition of this happens in a rightful manner and in a timely manner. So 1st of April is what they're talking about. But how big an uptick in demand are you anticipating at Mahindra Lifespace because of this?
I wouldn't like to comment on the big or small. I'm sure the overall market will see an uptick, and it will also, it will pan out by the number of questions and engagement our customers have. Already people have started asking us questions on what will be the impact and things like that. That means there is an engagement, and the whole intent, I think the message is very strong. The customers are believing that yes, there is an intent for them to be facilitated for buying, and that's what we are hoping and looking forward to.
Currently, Pankaj, what is the quantum of under construction homes as per your analysis?
Yeah, close to 12 lakhs 50,000 unit in 60 cities in India, and 53% falls in the affordable segment as per the definition given by the GST Council.
This is the additional?
No.
After the definition change?
After the definition has changed, which is 45 lakhs and 60 and 90 square meter.
So which had earlier on gone into the premium segment, that now the additional one has come back in.
Absolutely.
And that accounts to 60%.
53% of the overall unsold inventory as well as the sales also.
Okay.
But in terms of value of stock sold, it contributes only 22% because the costly flats contribute more into the value of the stock sold.
What's your sense? The last time that you were here, you were saying that the inventory buildup is so stark that it requires some mammoth efforts for it to be cleared. Do you sense that this plus what's happened in the budget could lead to that?
Yeah, I'm seeing it's a good time for the end users coming because the government's reduced the tax, but builders willing to sell, they are laden with the debts. We did assessments. The builders need to increase the sales by 2.5 times to stay afloat. Because the debt itself is too high. So in a sense, like the decision taken is in the right directions to boost the sales. Apart from that, it's going to really solve the cost crisis quite a lot. In making the project ready, that means the customer advances reduces. For a project's prudent economic viability, you have 60 to 65% of the money to be taken care by the customer advances. Right now, it has reduced below 30%. And that's a basic reason the builder have to go and borrow the money and to make the projects ready. That means it increases their finance burden. By reducing this, by boosting the sales, it is going to really bring back the economic order in which the real estate can start really behaving and performing well. So in the overall sense, it is very, very good. Otherwise, builders may be saying that I'll make the project ready and sell. At that point in time, I avoid RERA. I also have exemptions for the GST, but it is not economically prudent practice. You employ more capital to produce the same amount of square feet. Because your peak negative increases, it doesn't really give, for a country like us where we are facing problem of housing shortage.
Sure.
If I employ more capital, produce less, that means not economically prudent practice.
Sangeeta, I just want to come to you. I mean, while the government has taken, the steps on GST right now, which obviously is a leg up for the industry and for consumers as a whole, is there anything else that the industry, the real estate industry, which has been really under pressure for the last number of years, in addition to the GST kicker that they have got, would have anticipated?
So coming out of the tax framework, that's the discussion we were having just now. Devina, what stifles the industry particularly is the time taken for approvals and the uncertainty of policies. If you look at Mumbai, we have had a long time for the DP34. So such like things which take a long time to formulate or promulgate, and you have raw material investment done in land. That's where if we can bring the efficiency in the approval system and in the policy making, and getting it into single window format. I'm looking forward to the day when everything is in single window format and the framework is very, very tight so that we can save on the approval time and the uncertainty risk and give customers things and products at a better price. Because as I step back and I think we are in the noble business of delivering homes to people, which is the fundamental right of human beings. So these kind of changes will really bring in stability and price parity in the market for customers to buy their products at the right price and at the right time.
Okay. Well, maybe a better sense of how this and some of the other moves have impacted the sector would be known at the end of the June quarter once the new rates are applicable as well. Sangeeta, it's been a pleasure talking to you. Thank you so much for joining me today and giving us your thoughts. Pankaj, thanks for being a part of this discussion as well. Really appreciate your time.
Thank you.
Thank you.